Welcome everyone to HFN. Today is January the 18th, 2020. I'm going to give you all the 3 Chinese stocks that needs to be traded in 2020. It was an article written by Investor Place. And these 3 Chinese stocks, Nicholas is going to go into and try to substantiate why it needs to be traded in 2020. I already glimpsed through this article and he pretty much tried to give his points as to why these 3 Chinese stocks are a buy. Or is he? As always, from our perspective, the truth lies on the price chart. Everyone else place their ideas through the money that they invest in the stock market. So this is where the actual truth is. If it's your first time watching our video, hit that subscribe button. Like and share the video, because this is the location to where you're going to learn how to trade different and not utilize those pointless technical indicators, technical analysis, and even fundamental analysis, because like I stated, it is the price chart that is telling you precisely what everyone else is thinking. So if you understand and learn how to interpret what price bars and volume means, you'll understand where the market is likely to go. So make sure you follow us here on YouTube, Facebook, Instagram, Twitter, and then on our website, HueFinancial.com. This article was written on the 16th of January, 2020. And Nicholas starts off this article with Wall Street is getting over his fears about the tariff wars between the United States and China. So henceforth, he wants to go ahead and tell you and me about 3 stocks that needs to be traded since Wall Street is getting over the fears of the war, trade war. The 3 stocks that he talks about in this article, and I will have the link if you're interested in learning more about it, is China's large cap ETF, FXI is the ticker symbol. Then you have Baidu, ticker symbol BIDU. And lastly, you have Alibaba, ticker symbol BABA. Those 3 stocks have already seen a sharp movement higher in price ever since November of 2019. So why is he writing this article on the 16th of January 2020 if the market for those 3 stocks have already seen massive movement higher? Is he trying to persuade us so that the other side of the market can sell their positions to us? It's quite possible. I also went ahead and highlighted that Nicholas is not completely bearish on any of these stocks. In fact, long term, they should all be higher in the future and could make for good investments. So long term, throughout the next 11 months of 2020, these 3 stocks could see higher prices, is what he's saying. Now, this first one that he gives is Baidu. This is another indication as to why technical analysis is mass confusion. What in the world is going on this price chart? Looking at this price chart, you still have no idea where Baidu is going to go. And so many technical analysts think that the more indicators you have on your chart, the more proficient you'll be. And that could not be further from the truth. This is ridiculous. He has Bollinger Bands, he have EMAs, he have RSI at the bottom, he has volume profile here on the left side. All of that is pointless. The cleaner your chart, the better you'll know where certain financial instruments are going to go. Next one he gives is Alibaba. Again, mass confusion. The only thing that you can tell from this price chart is that Alibaba seemingly has made all-time highs. That's it. Until it made all-time highs here, it was just trading sideways. This does not tell you what is going to go in the future. All of this mess on this chart is not going to tell you that. It only gives you historical information. You need to know where it's likely to go in the future, not in the background, not historic. Unlike Baidu, Alibaba stock has already broken out into new highs. That's the only thing you can tell from this chart. This is definitely not an obvious place to start a bullish position in Alibaba stock. So what is he trying to tell us? Are you trying to tell us that right now is not the opportunity to buy Alibaba stock? But you wrote the article in January. You want us to come in January. Am I right or wrong? He's not bearish overall. So I guess in the midterm, short term, he might be bearish on Alibaba stock. But from a trading perspective, I bet there could be better entry points. So he's looking for this particular company to see lower prices. It's made all-time highs. Odds are that Alibaba pulls back a bit. This is not bad news. What do you mean it's not bad news, Nicholas? When a stock rallies this fast, it builds up a bunch of weak hands, and Wall Street usually likes to shake a few of those off to establish better footing for more forward progress. So Alibaba, according to Nicholas and his article, is not a buy. Then why is he trying to start off this article with 3 Chinese stocks to trade? Unless you're going to short Alibaba stock, this is not a buy, according to Nicholas. Having said that, this is not an invitation to short the stock. Well, hold on. See, he is causing confusion. He's expecting Alibaba stock to pull back, meaning he's expecting it to move lower. But in the next paragraph, he writes, this is not an invitation to short the stock. If it's not an invitation to short the stock, but you just said up here that it's going to pull back, that is an invitation, Nicholas, to short the stock. But rather, he wants you to wait for a better entry point for a buy. Ideally, an 8% correction could do the trick. How does he come up with 8%? But the downside could be a bit bigger than that, given the slope of the rally that brought these new highs. So 8% or greater correction is what he's looking for in Alibaba stock. Ridiculous. And this is another chart that Nicholas apparently utilizes to determine whether or not FXI is a buy. Again, I'm not going to go into this price chart. It's just nothing but confusion. FXI bounced off critical levels in July of 2019 and since then has rallied almost 20%. The exciting part is that if the bulls are able to get above $46 per share, they could trigger another leg higher to retest $51 per share. But is he expecting that or not? Based off this price chart, Nicholas, what are you looking for? We can't go by expectations or ifs, ands, or buts. We can't go by should or could. What is your price chart telling us, Nicholas? Luckily, there is a good base for FXI near $41 per share. So if the market sells back down to $41 a share, he's expecting buying opportunities for those who are interested in FXI. However, in the event it falls below $38, it could spur, there we go again, could spur another correction to retest the 2016 lows. This is not the forecast I have for it, but it is a possible scenario. Every time you read these financial articles, they always end the article with the opposite side of what the whole gist of the article is about. This article was about the buying of 3 Chinese stocks: FXI, which is a large cap ETF, Baidu, and Alibaba. If you're so convincing, or if your whole premise was to convince a reader to buy those 3 stocks, why would you end the paragraph or this article with, this is not the forecast I have for it, but it's a possible scenario? Because he wants to leave himself an out. So if these 3 Chinese stocks do move lower, he can go back and say, well, I mentioned that on the 16th of January 2020. So we are going to look at one of them. If you guys have been following our YouTube channel, we do cover Baidu and Alibaba, so I'm not going to go over those stocks. The only one that I'm going to focus on this video is the large cap Chinese ETF, FXI. All right, so let's look at that real quick. And we're going to start off here on the weekly time frame. Okay, one of the things I want to point out to you is that the market in FXI has been in a consolidational range for many weeks. Starting all the way back in 2018 is when this market in FXI started its consolidational range. You can also tell based off this price chart that the market is coming up here towards $46. That was the prior resistance area back in March and April 2019. So yes, you do need to be cautioned that the market in FXI can come back down from that particular level. It's been 7 weeks that this market in FXI has seen higher prices. Going forward, $44 has to be maintained for support in order for us to see a bigger leg higher in this particular ETF. The tariff war that's going on between China and the United States, if that was to come to full resolution, i.e. it's over. We're not going through no phase 1 deal, no phase 2, phase infinity. We're not going through any of that. Once it gets fully resolved, it would not be a hard deal to see FXI break above $46. Let's take a look at FXI on the monthly time frame real quick. So even on a monthly time frame, I mean, even this particular ETF has just been massively in a consolidational range. Look at that. From a monthly perspective, this stock or this ETF just bounces between $30 all the way up there to around $47.50. Now, currently looking at this particular price chart for FXI, the strength is still here. But I'm not expecting a bigger move to the upside until we get a bigger indication of the market breaking above $46. But the long term, I do like the market of FXI moving higher. FXI on the weekly time frame is where we're going to place our forecast for this currency. For this ETF. Now, we would like to see the market in FXI hold $44 for support, which is about 2.5% from where we close on Friday. That would be extremely optimistic in this market, seeing higher prices for FXI. But I'm gonna bring it down a little bit lower to compensate that the market can actually go a lot lower than what we expected to do, around $44. TP is going to be right there around $46. So we'll TP the market at $45.89, which will be about 1.71%. Okay, and that's just under precautionary measures, because we already got historic information that $46 is resistance. Okay, so again, that would be our TP, $45.89. But I'm going to play the market in FXI to continue to see higher price, maybe around $48 ultimately if we continue, and especially if we break $46 to the upside. So this is our price prediction, price forecast for the Chinese large cap ETF FXI. Looking for this particular ETF to continue to see higher price, and definitely the market looks very positive in terms of it seeing higher prices in the long term. Questions, comments, as always, leave us a comment. Make sure you always maintain our profitability though. I'll see you on the next one.